Hello and welcome to this special report here at XM.com. I'm Maria Pachardis, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing the coronavirus and the effects on global financial markets and the economy. So, Marios, many countries around the world are going into lockdown as COVID-19 continues to spread across the globe. Financial markets are in chaos, and there are widespread fears of a deep recession. What should we expect to see due to these lockdowns, and how are governments helping?
Well, Maria, in a nutshell, I think it's going to get worse from here. So most of Europe right now is on lockdown. It's expected to stay that way for 2 weeks. My guess is that it's going to take longer than 2 weeks. If you look at Wuhan, the first region in China that was placed under quarantine, it has been in quarantine for 7.5 weeks now. So Europe might be headed down a similar path. The US is not on lockdown yet, but it might be very soon. And what does a lockdown mean? It means that consumption is going to collapse. Everything is closed in Europe right now, from bars to restaurants to cafes, more or less everything. So consumption is probably going to fall off a cliff. And yes, governments have announced a lot of measures to help the situation, and those will help. They've announced things from wage subsidies to loan guarantees for smaller businesses, and those will be helpful. The problem is there's only so much stimulus you can do. So if I'm a small business and I'm shut down for 2 weeks, then the government can help me out by giving me some temporary subsidies. But if I'm locked down, if I'm closed down for 2 months, then suddenly it's a completely different story. Then suddenly the help I need is much greater, and the governments might not be able to provide that. So long story short, the longer this lasts, the more the damage. And I think that we might very well be headed for a recession in the first and second quarter.
So, how do the current economic conditions favor gold and the yen?
Well, I like both of those. So the simple thinking is they're both safe haven assets, right? Which are like benefit in times of global turmoil like right now. But if you dig a little deeper than that, both of these assets, both the yen and gold, benefit from low interest rates. And interest rates around the world are going down extremely quickly. So gold, for example, gold usually competes with bonds for safe haven demand. So when the yields on government bonds go to zero or even negative, then suddenly gold, which pays no interest to hold anyway, becomes much more attractive. So I think we're likely to see gold and the yen benefit. Now, someone might argue, sure, but we haven't seen gold has actually fallen in the midst of all this chaos. That's true, but that's not because gold suddenly stopped being a safe haven. That has more to do with funds, leveraged funds especially, being forced to liquidate a lot of their positions to cover margin calls. So it's a sell everything mentality. At some point, though, I think that will pass and gold will come in demand again. And I think at the latest, the retreat that we've seen might even be seen as a buying opportunity for many.
Okay, now regarding the next few months, what are possible triggers for a sustained recovery?
Well, the obvious one would be the announcement of a vaccine or a drug that can treat the virus. However, if you listen to what medical experts are saying, they're saying that it could take 4 to 6 months for a drug to be developed and then maybe another year before it's mass produced. So this is more of a story for next year rather than this year, in my opinion. Now, in the shorter term, what could stop the market sell-off? Well, I think that in a few weeks' time, we're likely to see the rates of infection in Europe slow down. We've seen that happen in China and in South Korea and every other region that has gone into lockdown. A few weeks later, you start seeing the rate of infections decline. So I think that in a few weeks, we're going to see that happen in Europe. And once that happens, that might be a positive sign for the market. Now, I think that eventually we're going to recover from this. And I think that when we do recover, the upside is going to be explosive because we've added a lot of liquidity, a lot of stimulus. So when the markets get the green light to rally, it's going to be as explosive as the downside was. However, I don't think we're there yet. And I think it will take many more months before we get there. And the situation is likely to worsen even further before it improves.
Marius, thanks so much. And thanks for joining us at XM.com.